What is the COT report? Well, the COT report is the only true reading of volume in the FX market. And the reason for this is the FX market is a decentralized market. Unlike trading equities, where you have to purchase your equities via a traditional stock exchange, be it the London, the Nasdaq, etc. You can buy currency from a variety of trading houses. So what is the COT report and what does it look like? Well, this is how the COT report is released by the CFTC. This is free for public viewing. What you can see here is there's a few different types of traders. You've got non-commercials, commercials, total positions, and then the non-reportable positions. This is for gold, as you can see in the top left. It gives you the long contracts, short contracts, spreads, long short, total long and short, and long and short here. And for you as a non-commitment trader or potential newbie when it comes to the commitment traders, looking and trying to understand this report on a standalone format will be like trying to learn a new language. What you need to do is you need to look at this report not on its own but against numerous reports, and it needs to be in a format that you can actually make an assessment. So the three types of traders we've got are the commercials, who are a user or producer of currency or commodity that only uses the market to facilitate their business transactions. Traditionally, these traders are hedging the market. Then we have non-commercials. These traders traditionally are trend followers, using the market for speculative purposes only. You'll be under this category. That would be investment banks, hedge funds, equity firms. They're your traditional non-commercials. Your non-reportables, these are the traders that basically account for the open interest that has not been accounted for by either the commercials or non-commercials. These traders are generally on the wrong side of the market, so do not follow them. The COT cycle, so traditional X and Y axis, here we have price, and across the bottom we have time. The red line represents the price, how it moves up and down. Now, if we look at these in separate instances, as the market rallies, the commercials, so the user or producer of a commodity, will be selling more and more of this commodity. Why? Because they will be generating more profit the higher the price gets, as it's something that they've produced. The non-commercials, they will be buying the dips here. Why? Once the trend has been established, they'll be looking to generate a bigger position in a market that they believe has got a lot further to go. How do we then get a top? Well, basic, simple economics, and that is basically supply and demand. So as price rallies, the commercials put more short contracts or sell more contracts into the market. On the flip side, the non-commercials take up these contracts and buy them. When we get a top in the market is when the commercials have put so many short contracts in the market and the non-commercials cannot basically take these contracts. In order for there to be a shift, the price has to drop, at which point simple oversupply of a commodity or a currency in the market, and therefore the price will drop. Now, this is the format that we look at the COT report in. This is provided to us by one of our partners. And what we have here on the top is a weekly chart of price. Here we have the COT index, which we vary. We look at three different time periods, a 6-month, an 8-month, and a 36-month. These top three lines show the commercials activity, the red line being the short contracts, the green line being the long contracts, and the blue line being the net position, which is long contracts minus short contracts. Underneath we have exactly the same, but this is the positioning from the non-commercials. So basically what we do here at the Lifestyle Trader is we analyze all this information for all asset classes and we bring it to you, offering the trading opportunities that will be presented from COT data. This is for midterm trading and for those people that would like to basically look for midterm investment, and this is something that can be fit around any current lifestyle, whether you're seriously indebted at work and very short of time, or whether you've got plenty of time on your hands. You know, this is something that anyone can fit in. This is a very sensible subscription price. It comes to you cheaper than you can find the data itself, and with all the hard work done. So it's the best way for you to develop your trading skills with the COT report. If you are a Lifestyle Traders Club member, you can get this data and this analysis sent to you weekly at a discounted price. We will present a video each week with the latest opportunities from the COT report. If you have any further questions about this, please don't hesitate to email mark@tradeandtrain.com.